the one separating you from the coffee break, so I'll try to make it as painless as possible. I'm Bijaoui. I'm Josh's partner at Eastwind. I am based in New York, although from my accent you can guess that I'm not native from Brooklyn. I fell into EdTech about 15 years ago when we talked about definitions. It was called e-learning, I-learning, and other names. And I've been covering it ever since. First, when I was at McGraw-Hill Education, when I was in charge of strategy and investments, and then for the past 10 years as an investment banker. We heard from the previous panels about the conflict between for-profit and social good, and thought it would be a perfect segue into the impact investment panel. And I'd love to welcome our panelists, Janet, Yoel, Cecile, Omri, and Vanessa to the stage. So before we get started, I was told that this is the only panel where women are a majority, and this is, which is great for us, and it was done on purpose, just to be clear. What? It was done on purpose. So just like the previous two panels, I would love the panelists to introduce themselves and tell us how they got involved with impact investment, and to the extent it's relevant, how they define it. And maybe we start with Vanessa.
Good afternoon. My name is Vanessa Bartram. I'm originally from US, made Aliyah 3 years ago. Recently started an impact investment fund called Zora. And we are making investments in education, health, poverty alleviation, and the environment. We're a little bit different than a typical fund in that we do our investments deal by deal. So we just had our first pitch event in New York and San Francisco 2 weeks ago, where we brought 4 Israeli impact entrepreneurs to pitch to our investors there, and are in process now of closing on our first 3 investments from those pitch events. In conjunction, I also started with my partner Avi Deutsch an organization called Levan in the US, which is really to educate the US Jewish community about impact investment and to use it as a way of engagement with Israel.
Omri?
Thanks. Hi, my name is Omri Boral. I'm from Tech for Good, and we're also operating a bit differently than other funds. We've started by working with entrepreneurs, and we have programs in Israel and in Singapore. We're now developing into other countries, and our idea is to really create an ecosystem, which is something that we see as crucial for entrepreneurs, definitely for impact entrepreneurs, to develop their startup and actually get to a stage where their solution is applicable. And we've discovered that the one thing that's usually stopping a lot of them is the first seed round or even pre-seed, which is very difficult for impact entrepreneurs to find the resources to get the money from. And so we're now constructing a seed impact fund, which will invest in startups, hopefully in Israel to begin with.
I'm Cecile Relilius. I'm the founder and managing partner of Impact First Investments, which is Israel's first venture capital fund in the impact space, which really means that we're a fund which is very similar to a venture capital fund, very much like Uri Adoni, who sat here before, was describing. Only our focus is technology for social impact. So we look at global social impact, because technology is scalable. So we are creating the meeting place between Israeli technology and the startup nation, like everybody knows, and global social impact and social good, and that can be in any domain. It can be in financial inclusion, in disabilities, in education, in healthcare, in whatever domain. We are very open to that. We're really feeling like we're building the playground for impact entrepreneurs to come and play. So we welcome any kind of domain. And we are helped by a lot of people from our industry, from the venture capital and high-tech industry, to mentor and screen the companies and go with them a long way in order to bring them to growth. We are partnering with Tech for Good in where we see the early stage entrepreneurs, where they're still too early for us to invest in, but still we like to focus on them and try to help them get to the stage where they're ready for investment. And we're basically looking at amazing companies, great teams with a great mission and a very solid and strong business model.
Thank you, Cecile. Hello, everybody. My name is Yoel Cheshin. I'm the founder and the chairman of the 2B Group. 2B Group is a tool for social change. That's what I call it. It consists of 3 branches. 2B Finance, which concerns the capital markets. 2B Angels, which is a high-tech fund. And 2B Community, which is my baby. This is an impact investing fund with a unique model with the goal to promote and strengthen regular businesses that allocate a large sum of their profits to social causes, to NGOs, in order to relieve their burden on philanthropy. Nowadays, NGOs promote basic civil rights, basic social rights, and a large sum of what they do is based on philanthropy models. Philanthropy is great, but our goal is to minimize philanthropy only to the places where it's absolutely needed and where we can find a business model that's for the better. So like I said, our model is to build regular businesses that allocate a large sum of the portion of the profit to social causes in a very unique model that I might elaborate later on. Thank you.
I'm Janet Fahima. I'm in the International Corporate Transactions Partner at Herzog Fox Neman. Like Shabolet, it's one of the other big leading, one of the largest law firms in Tel Aviv. Pleasure to be here. Before I say any more, I want to make a word of comment to all of you entrepreneurs who are still in the room. Raise your hands. I'm glad you're all here. The vocabulary you're going to be hearing today about impact investment is very important in your world. To all the entrepreneurs outside getting coffee, well, sorry about that. So when I was asked why I'm on this panel, it was more like, why are you on this panel? Like, you're a lawyer. Well, the reason is you need lawyers everywhere, and especially in an area like impact investment, because you have to understand how you get alignment between your shareholders and the company when you're in EdTech or anything else. What obligations as an EdTech company are your shareholders going to put on you? And how are you going to be able to measure after whether your objectives have been met? What are going to be the consequences to you when you have not met your objectives? These all need to be worked out in contracts, which is where we come in. The problem is very often your professional advisors may not understand what your impact investors are actually trying to do. And for that, Herzog Fox Neman set up a unique impact investment practice area to handle the questions of contractual relations, legal restrictions, government incentives, structural alternatives, to support the whole ecosystem from a legal side, to help the relations between entrepreneurs and philanthropists and investors. Now, you asked for definition. By luck, I brought a definition with me. This is the definition of impact investment used by GIN, the Global Impact Investment Network. It's considered sort of the trade association of all impact investment funds headquartered in the US. And they define this as investments made into companies, organizations, and funds with the intention to generate social and environmental impact alongside financial return. This can be in emerging markets or developed markets, and it can have a below market rate or a market rate of return.
So because we're talking about education, isn't everything impact in EdTech? And then what's the relevance of the category? Maybe Yoel, if you want to take.
I think I have a problem with the concept of impact investing, because I think all businesses and all corporations should have this double bottom line. This is what I call a healthy corporate. A healthy corporate gives some kind of service or some kind of product to consumers on one hand, and which is supposed to leverage their life to give them a better life this way or the other, whether it's a supplying bread. That could be, if supplying bread could be also impact. And also Waze, this startup that made a lot of money to their investors, has a lot of impact. We all get maps for free. All citizens get maps for free. So I think defining something as an impact has a problem in terms of there shouldn't be such a strong distinction between corporates for impact and corporates for profits. Because once you say this is an impact investing fund or this is an impact corporate or startup, then you have a distinction. All the other ones, they ruin the world. We help the world, they ruin the world. This is not the right thing. Although, since we live in an era where the bottom line is to maximize profit, I think it's good to focus on things that you focus on the intention. Yeah, but when you come to think of it, did Mark Zuckerberg intend to improve the world? I don't know. But as a matter of fact, he did an quite amazingly great job to improve the world. So I think, like I said, every corporate should have some kind of impact. Actually, everybody has some kind of impact. You have employees. Even Dubek, even corporates who manufacture cigarettes, they have some kind of good impact. So we need to be more accurate on what impact is, and as far as I'm concerned, the intention is not that important. Actually, when you focus on the intention, you go too much to the side of philanthropy. If you have a good intention, then it might be problematic not to have a good business model in order to maintain and sustain the corporate under a business model, which is the most important thing.
Like Janet or Cecile? Yeah.
I think it's always supposed to be alongside a financial return, never by itself. But the important thing of impact is every EdTech company impact? Probably not. Are most of them? Probably. Because you have to look at the social problem they're trying to address. So if the social problem is to help the upper echelons of university students do even better, to make our high-tech people even better, to make that upper 3% even better, that's not going to be considered impact investment. If we're trying to increase education in the periphery and in areas that don't have good educational opportunities, and we're using technology to help them, that's going to be considered an impact investment.
See, that's why you need lawyers. They will tell the people what you actually mean to say, but better.
But you got to pay for it.
Oh yeah, for sure. Yeah, there's the issue that you all raised is not something we can resolve in 2 minutes, and there are really different ways of looking at impact investing. So instead of going into that discussion, and Yoel and I have been talking about this for ages, and we will probably be talking about this for ages further, I'll just answer your question about education. And I'm being asked this question a lot. One thing that we focus on is healthcare, and I'll give the answer on the healthcare side, so because it's easier maybe to understand. So people say, okay, so healthcare, any healthcare is impact, right? I mean, if you're about saving lives and you're about treating people and providing them better quality of life, then obviously you're going to make impact. But it doesn't mean that every company, and certainly every technology company in the healthcare space, is an impact company. And yes, there is a lot to be said about the intention of the entrepreneurs. There's a lot to be said about their proactive way of solving or addressing a social issue. And it also depends on where you as the investor or you as the company want to be in terms of, is your focus to improve the lives of people who are 95 years old to become 98, to have a better life quality or longer life through healthcare services? Is that impact? No. Do you want to create access to healthcare for people in developing countries while developing a solid business model that will maximize profits? Yes, that's impact. So same for education. Now, I haven't seen enough EdTech companies to make the same differentiation as I do with healthcare. I haven't seen, so far everything I've seen is pretty much in the impact space. Although I'm pretty sure that a certain percentage of the EdTech companies would not be considered impact. But broadly speaking, it's pretty much it. And another problem in the EdTech space, I think, is that there isn't enough knowledge on investing in EdTech companies, and not enough track record, and not enough years have gone by since investors started making these investments. And as opposed to healthcare, where you can probably easily get funded if you have a good company, with EdTech, probably not. So that pushes it even further into the impact space. To give you a similar example, if you have a product that is applicable for developing countries in whatever domain, even if it's not per se impact, because of the geography, it's probably going to go into the impact space. So it's not a black and white answer, but there is something to be said about impact and about the intentionality of the funders and the entrepreneurs that is very important.
Omri, you wanted to add something?
I just wanted to add another aspect which I think is important, and I see a lot of entrepreneurs that are trying to figure out their way around it. A lot of people argue about the definition of what is social, what is impact, and in many cases I think that people sometimes forget to look at how the organization is functioning, what's the operation built like, how the social aspects are inserted, are intrinsic to the business model and to the business activity of the organization, the entire activity of it. It's not like an add-on where you have a business activity, you do it like any other business, it's profit maximizing, etc. And then you have some kind of line of business that is more, for sometimes developing countries, or for lower social economic, help me out, social income populations. It's not that. It's having different mechanisms to make decisions in your organization. Every decision should be based on business aspects and social aspects together, and it's not something that you can push aside when it's easier and more comfortable. Which is it's a different perception, and the double bottom line movement, or the double bottom line issue, is something that should be going with you through the entire process. So that's it.
So we've got impact investors and advisors to the community that are essentially captive to, I'm exaggerating, but captive to education and healthcare. And I've seen a lot of entrepreneurs here. Are you seeing enough deal flow? Okay, so that's the answer. No, so what's the problem?
I think it's a developing market. We've just started the concept of impact investment. What I believe that what is going to happen, that this legislator throughout the years is going to make things much better. That is going to give different kinds of incentives to the impact investment world as it gives to the high-tech sector, for instance. In the high-tech sector, you have very strong incentives such as incubators that leverage your money 85%, which is quite amazing. If you had such an incubator for impact investing, that could take the startups that are somewhere in between a for-profit and non-profit and bring strengthen them in a way that it makes them a very good company to invest in. And I think there is emergence and awakening of more and more entrepreneurs deeply understanding, especially the younger generation, that this is what we need now. So what I believe that it's going to become stronger and stronger every year. I believe that now we're behind the developed countries in the Western countries, such as the United States and England, such as legislation and deep understanding of what impact investing is. But I truly believe that we're going to be in the lead. Meaning it's if you want to really live an extraordinary life, so come to Israel and live here, because I think the impact investing scene is going to be just great.
We're not seeing enough good deal flow.
Okay.
We're getting very early stage companies, sometimes just ideas. which are great, but as an investor, it's just not mature enough. We're seeing nice ideas with nice technology solutions that have no business model, or the business models are very shaky. We see people with sparks in their eyes wanting to solve this amazing social problem, but with no management skills. So at the end of the day, as an investor, we want to succeed. We want to make huge impact. And we also want to return capital to our LPs, obviously, but we want to make huge impact. So if we invest in the wrong companies, then we're not going to make any impact. We're going to lose the money, but we're also not going to make any impact. And the alternative cost of that is very high. So we have to choose very, very carefully which companies we invest in. So far, all the EdTech companies that we've seen just didn't have all the right components. They weren't great companies, or they were very, very, very early and needed a lot of care until they could be investment ready.
So it's a quality problem, not a volume problem if you try to...
I haven't seen a lot of them either, so I don't know.
So you've got volume
what's the
and
volume.
quality.
As I said, we're kind of overall impact for technology for impact globally. We're not specifically EdTech oriented, so we see pretty much everything. I haven't seen a lot, and the ones I've seen, some of them were pretty good, but they have a long way to go.
Have you made an investment in EdTech?
In EdTech, no, not yet. I wish I could.
From what we've seen, a lot of the EdTech companies are still very focused on making their connections with the government, and they see it as a very, very large part of their business model, providing services to the government or to the education system, which has two problems. First, the process is very, very long, and the barriers to getting inside the education system are very high. Plus, there's something very, very local about it. The education system here is very different than the one in the UK. And if you're a startup, if you're basing your business model on technology, then you have to be scalable, and you have to realize how the social issue that you're treating, that you have the attributes that are global, or at least that have a few markets. And we've been seeing it actually not in Israel, but in other places in the world. We see entrepreneurs that are in the EdTech industry and are oriented, that are looking at various markets, and I think that's part of the developments that we need to see happening here. We do see some very, very interesting technology, so I think that when you talk about creativity and the Israeli DNA, entrepreneurial DNA, it definitely is something that reflects from the EdTech industry, but still, as others have said, it's still very early stage.
Of the EdTech investment deal flow that we've seen recently, the majority of it has been very early stage. It's been companies that are focused on sort of local K-12 learners and problems that they're facing. One of the main challenges that I've seen with a lot of these companies is that they have a B2C model, that they really have no sort of marketing capacity or sales channel to properly address and scale. We're in process now of closing an investment in an EdTech company. The company was particularly attractive because I think they did a great job of using Israel as sort of a local testing ground, and now is very aggressively moving that to other markets and is now selling in 5 different countries around the world. So that was something for me that, they have the scale of being able to sell to school systems, but again, with the recognition that every country has a very different matrix of purchasers there, whether it's school systems or education publishers.
So I want to, you want to say, go ahead.
I think impact investing as it of itself is a term that's been developing for probably less than 10 years around the world. It's a developing concept. The investors are also developing in what they're looking for. And maybe the latest range, as they develop, they want to see more measurable results of their investments. It seems to me that in EdTech, you built in may have some of the easier metrics to establish, because there are a lot of things that we've already seen on the board today. Lowering dropout rates, increasing grades, graduating high school. These are things that are very easy to measure, so you can see improvement. So you're offering, if your programs, obviously it needs to be a good company that can be profitable with a business model and all that, But in terms of being able to have matrix that you can establish for your social side, what's the problem, what are you trying to achieve, I think EdTech has a big advantage over other social impact areas, and that should be taken advantage of.
So I want to pick up on a couple of things you said, which was the companies are not prepared. And Yoel said we need sort of a stepping stone before that, which is, government funded. So is the approach here is legislative and budgetary as opposed to being driven by the private sector? And if yes, how do we do that?
I'll start. The stepping stone needs to be similar. You all talked about the incubator system in Israel. So that's when we're looking towards the government. Then there are no incubators right now for social impact generally, and definitely not for EdTech. In order to be able to compete on an incubator, we have to create a partnership with major international players that have deep enough pockets that will be able to invest in the companies further. Because this is the chief scientist has been working on the incubator model for years now, and only in the past 10 years, even less, it's been the model is such that it's working. And we're even partners ourselves in the incubator on digital healthcare together with three giants. Is Pitango Venture Capital, Medtronic, and IBM, together with the Ramba Medical Center. And it's true that it's 85% leverage on the capital from the government. But you also have to bring your own capital. You have to bring the ability to invest further in the companies. So it's a huge model. So for us to be able to create a successful incubator that will be funded by the government that can do early stage impact investing, we need to bring international players that have deep pockets. Okay, so that's one thing, and it's definitely the role of the government to look at EdTech and impact as part of their policy. On top of that, and until that happens, because governments tend to move slowly, it's a good idea to think about the role of philanthropy in that respect. Philanthropy sometimes can step in where the government still doesn't step in, because they're risk averse. They don't really. It's like Eli Horowitz said, "I'm in the business of deploying capital, giving money away." Right? So. When you're going to deploy capital and you don't care about returns, then the best way to do it is to put it in a place where the result is going to be the incubation of companies that will later be funded by investors and will have business models and will be able to create jobs, create impact, create scalability, bring capital from Israel and from elsewhere, and create a whole industry. So it might be a good thing for philanthropists to think about their role in providing a sort of first loss cushion or a stepping stone with philanthropic capital to nurture the companies and fund them to a certain stage when they become investment ready. And it's not only about funding, it's about a whole array of things that you might talk about later that will provide the startups with the necessary tools to be fundable and to move on. So government, philanthropists, and also stakeholders. Stakeholder involvement is very important. For instance, if you bring stakeholders, and maybe Amri will elaborate a little bit about that, when you bring stakeholders who say, okay, my problem is level of dropouts, or my problem is that not enough children graduate with 5 points of mathematics, and you define, and they are the stakeholders, they define the problem, and they're willing to put in some capital to help solve this problem. And to them, it's an investment in the future. It's not about getting financial returns. Then they identify the problem. They tell you how to solve it. They help you look at the solution and test it together with them. So they provide a partnership which is much more than capital that will bring the companies to the next level. So it's a sort of opportunity that is very lucrative and available for a lot of people who are not looking at returning capital. And then it will also create opportunities for us, the ones who do want to create capital as well as impact, to invest further into these companies. So these companies will have somewhere to go after they're done with the incubation process. Sorry.
So who's in charge of this? Because you're sort of, the way I'm hearing, I'm a bit of devil's advocate. You're sitting here and you're saying, they're not ready for it, we don't have the ecosystem, so we're just going to sit down and drink coffee until they show up. can we do something? Maybe that's the role of impact, is to prepare them for that and work with the stakeholders and the government and the philanthropy, and that's the value add.
We need as many success stories as possible. And what I mean by success stories, it's not only the impact of education. Its success story is the ability to combine both together, the double bottom line, meaning you need the social impact, but you need to present very nice returns, because what you want is business models. Only with business models you can solve the problems. And so we need some success stories, and the government always comes afterwards. Okay, so it's good success stories. It's not only the matter of government. I mean, also most of regular investors, business investors in Israel, see impact investing in general as philanthropy, and this is completely wrong. Because when you look at different kinds of analysis they did, I heard of a new one from Gini or anything like that, that impact investing has great returns compared to regular businesses. So we need to deeply understand that impact investing is regular investment. The more we understand that impact investment is regular investment, the bigger chances will be that we'll succeed with EdTech or anything else we're dealing with.
So I want to continue on what Yoel was saying about creating success stories. And what we've been doing for the past 2 years is trying to do exactly that through really constructing the ecosystem from like bottom up. And part of it, as Cecile was saying before, is engaging partners or corporations, for that matter, that have the ability to invest the money and to just make amazing resources accessible for entrepreneurs and not expect any capital in return. So what we do in other industries, not in EdTech yet, but if you have suggestions, then I'd be happy to hear. But for instance, I'll take Tnuva, who has been our partner in the food tech industry. And Tnuva has set for themselves a challenge to improve the nutrition that they're putting on every table in Israel. And they realize that they can't do it alone, and they have to outsource the innovation to entrepreneurs that are more connected to the field and that are not and that are acting from different perspectives than, you know, a huge corporation such as Tnuva. And what we've been doing with them is defining the challenges in the nutrition part and wellness and how you can prevent diseases through the food industry. And we've actually, just yesterday, we've ended the application period to our program. And this is the third time we've been doing this with Tnuva. And 2 years ago, when we started out, they were so disappointed, they were so frustrated. They said, you know, the entrepreneurs, it's cute ideas, they're nice, but it's early stage, it's not something that's applicable, it's not necessarily relevant to what Tnuva is talking about. And yesterday, we were so happy to see that there are so many more entrepreneurs, that the ideas are much more developed, much more relevant, coming with professional teams. And I think that the role of corporations and NGOs, for that matter, that have so much professional know-how, that have the knowledge, that have the regulation knowledge, that can bring in so much that is not necessarily money, just to make sure that we do have the good deal flow that can create some impact and come to these investors and show them that this could really happen, and then the capital will follow.
So I want to turn the table for a second. There are entrepreneurs in the room, and you've heard what the problem is with you. Would love for one entrepreneur or more to tell us what the problem is with impact investors. Is there anybody who's willing to take the challenge? Okay. Go ahead.
So if I'm an aspiring entrepreneur and I'm looking for investment, essentially what I see...
Come here, you're really close to a mic. Just come run up here.
Thank you. So if I'm an aspiring entrepreneur and I'm looking for investment in my new technology company, essentially coming to you, I'm committing myself also to my business model, but also to the impact objectives. How does partnering with an impact firm, how is partnering with an impact firm or taking impact money preferable to normal VC funding?
So is the question is when you take money from an impact investor, is it, and I'm rephrasing a bit, is it affecting your business model because you're taking a double commitment?
With the assumption that what I'm doing causes impact as we're defining it broadly here, yes, I'm making a double commitment.
Your answer is yes, and that's what I said about aligning interests in the beginning. You need to align your interests with your investors. They are looking for two different things for returns. They do want to see social returns. You're not going to be able to take their money and then change your business model down the road, or at least not if the contracts are done right. You're not going to be able to change your business model and all of a sudden drop the good part because you just got a better market somewhere else in a higher volume area for higher yield individuals. That's not going to work. So yes, but look at the example of a strategic investor, not a VC, but a strategic investor. We've had them around, multinationals. There are 240 operating in Israel. Most of them came in through strategic investments. They bought companies, they invested in companies, and they had goals. They needed to cooperate not just for financial returns. Those companies also had to stay true to the goals of their investors. It's very similar.
It's coming.
So I'm actually seeing the problem in reverse many times. I see entrepreneurs that come to us and say, oh, thank God, I'm sitting with people who want to make social impact. I'm so used to presenting to investors and I had to hide the fact that I want to make social impact because they're afraid that I'm not going to make them any money because I have social impact on my mind. So sometimes I get entrepreneurs saying, don't invest or invest a very small amount. Just put your name with us and make sure that we are aligned so you can help us frame our social impact and understand where we want to go and how do we blend this into our business model and how do we make sure that we measure it and that we can really set our sights on making impact and making profits and actually measure what we did and make sure that we did that. So I'm seeing the other side of the equation. And I think that generally speaking, a venture capital or an impact venture capital like we are will be looking at the exact same things as venture capitals will be looking at. So a great team, a great idea, solution for an amazing problem. It doesn't have to be disruptive, by the way. I'm not crazy about the word disruptive. And at the end of the day, the trick is about seeing who the impact entrepreneurs really are. And is it in their DNA? Is it, I think this is something you wanted to say, what you said, Omri. Is it within what they believe? And how easy is it going to be to create a mission drift and get out of the impact stream and go to some other market or some other application that doesn't have any impact? All these things are up to us as investors to screen and try to figure out, are you for real? Are you a real impact entrepreneur? Are you really committed to what you want to create in terms of social impact? And are you capable of creating a true business model and performing on it and executing and reaching the goals of your financial returns that you set yourself? So it's a skill set that's, it's when it's embedded in the DNA, then it's almost a no-brainer. But maybe other investors will tell you, okay, well, and then we've seen that. You have a nice idea. It's applicable for this and that market, which is no impact whatsoever, and this is where the money is. So let's first focus, we'll invest, let's first focus here, and then one day we'll come and take care of your impact mission. And if you agree to that, then it's really not in your DNA. And we've seen entrepreneurs that we invested in that refused capital like this and came to us and said, finally somebody understands who we are. So it's a dialogue.
So there's something interesting that we've seen in the US and talking to about the track record is we've seen non-impact investors investing with impact investors, the non-impact investors bringing the leverage, the capital, because typically the impact funds are smaller, and the impact investors bringing the domain expertise, not about making an impact, but impact is usually in a couple of verticals. And is there a scenario in, when the market matures in Israel where we see those two living together and investing together?
Of course. We're part of the, she says 3 minutes. We're part of the Pitango group, which is Israel's largest venture capital. And I believe that we're a Trojan horse in that sense. So we're letting the venture capital industry here in Israel fall in love with us. And eventually they'll all be doing impact investing. And we provide them with the market expertise and the domain expertise of impact, like you said. We also make them look good. They like us. We're reversing the table. If a year ago people would ask me, oh, can you introduce me to Chemi Perez, the head of Pitango? Now it's vice versa. Twice a week I get emails saying, oh, Chemi, can you introduce us to Cecile? Okay, it's funny. But this is where we're going. And I believe this is really where we're going. And non-impact investors will definitely team up with impact investors and invest later on.
Do you have the same limited partners as Pitango?
No, we have different limited partners, even though the Pitango's limited partners, which come from the alternative asset management, are also establishing their own impact funds as funds of funds, and they're looking at us for investment opportunities.
There could be a strong conflict. I mean, let's say it's a VC that its goal is to maximize profit, and its goal to maximize profit, if it changes the goal, I might say very clearly this is immoral. It's immoral for the investor, the contract with their investors. Their investor put their money, it might be a Mossadim, all different kinds of legal entities which help different kinds of populations, and their goal and their contract, and they're committed to maximize their profit. And sometimes if you have, Cecile, let's say, an impact investing fund that goes to some kind of a first-year VC, I don't know, Bessemer or whatever, in Palo Alto, and you tell them, okay, this is the social thing, and we want to raise your money, they will definitely tell you, okay, if you want to you have a great idea, there's a potential for a great ROI, but if you don't focus on the capital side, then we cannot invest. So there is a conflict, actually. What?
With technology, you can do both.
The goal is to find the singular point where the social and the economical are combined together. This is the magical spot that we're all looking for. If it's a little bit here, it's a little bit there, so you have all different kinds of problems.
So I want to use the 3 minutes that Yossi gave us, Josh took 2, I'll take 1. Any parting statements from Vanessa, Omri, or the rest of the group before we break out for coffee?
I'll use it as a free advertising second here. We just brought 4 entrepreneurs to pitch in New York and San Francisco to our investors there, and we'll be investing about $500,000 across 3 of the companies that came. We'll be looking to do that again in the fall, so looking for ideally 2 fantastic EdTech companies to bring to pitch again.
Can't follow that. I just want to say that we see so many entrepreneurs that are so frustrated, and a lot of them are coming from the professional side or from the social side and saying, you know, I don't have the know-how of how to create like a business model for this. I'm not from the high-tech industry. Solve this. There are so many tech entrepreneurs that are looking for something a bit more meaningful than gambling or, excuse me for saying, fintech and cyber and things like that, which are great. Find those co-founders and then come to us, to all of us. But I think that you have to do the legwork and really not give up on, you know, saying, yeah, but I'm more like, you know, I'm more to the social side, I'm more to this side. Because if you... That's it. Time's up. Hello? Oh, okay. I just wanted to say, as Yoel said at the beginning, we do need success stories. And in order to create them, it's all depending on you at the end. So you have to do the hard work, and we can only help. So go do it.
You asked who's minding the shop, right? Who's in charge? Who's in charge of creating this ecosystem? Yeah, well, no, I'm not. The thing is, I think, oh my God.
You didn't say the grandmother, that's good.
Yeah, thank you. I think that I challenge, thank you. See, legal counsel again. I think that we need to challenge people that are organizing this conference in thinking deeper on how to create this stepping stone to enable us as the investors to step in with the capital and the ability to bring the companies to the next level.
Thank you for, join me thanking the panelists.